Hey everyone, welcome in to another daily editorial here on the KE Report. This is a special private webinar that I am recording with Skeena Resources. I am joined by the president and CEO, Walter Coles, also the company's vice president of exploration and resource development, Paul Geddes. Skeena is traded on the TSX under the symbol SKE and on the OTCQX under the symbol SKREF. Now, Walter, Paul, and I are following up on the big news that came out just today, and that is a updated resource here at the Eskay Creek project. The headline numbers: 5.3 million ounces of gold, grading 4.3 grams per ton gold equivalent. The most important thing here, I think, is that pretty much all of this is in measured and indicated. Walter, let me bring you in first then. Give us a big picture understanding of the importance of this resource estimate that, in all fairness, I believe beat even your guys' expectations. Because when I was talking to you guys were guiding for 4-5 million ounces. This came in at 5.3 plus 300,000 ounces in the inferred. So give us some big picture comments here, please, Walter.
Yeah, thanks for that. Thanks for that introduction. Thanks for the opportunity to have myself and Paul on to talk to you about this new resource update. You're exactly right. It beat my expectations. I was looking for Paul to give us 4 million ounces in the measured and indicated category and about 1 million ounces on the inferred, for a total new global resource of 5 million ounces. He blew that away. Instead of 4 million ounces of M&I, Paul's got us showing 5.3 million ounces of measured and indicated. And the grade on that is, as you mentioned, 4.3 grams per ton. So pretty much he's been able to grow the project dramatically and maintain that grade. And when you add that extra 300,000 ounces of inferred, you know, we're talking about a global resource of 5.6 million ounces. So that was better than the 5 million ounce goal that we set for Paul. So he's done a magnificent job of delivering better than what we asked him to do. And obviously he set the bar for himself for next year, because we'll be looking for, we're looking for Paul and his team to go out and find significantly more ounces and continue to grow the size of this project. But don't let me steal the thunder from Paul, since he's on the call. I'd love for him to go through the results in more detail with you.
Okay, Paul, take us through. You have put together some of these slides. That's why we're doing this in video format. One thing also that I do want you to discuss or touch on too is the growth from that last resource. It's massive growth in terms of the resource, but also the grade has pretty much stayed the same. But Paul, take us through some of the key highlights here that you're outlining.
Excellent. Well, thanks so much again, Corey, for having us. You know, before we get into the guts of the resource itself, I really want to emphasize that this was a team effort for absolutely everybody at Skeena. So not only did we, convert the resources like we had anticipated with the infill, but we also did expansions, and we did it safely. And the part of that is we're still greater than 500,000 person hours COVID free, and we did not incur any lost time injuries last year. So kudos to the entire team, and thanks to everyone involved. Well, here's what we've all been waiting for: the 2021 combined resources. So if we take a look at the breakdown, the measured categories at the top, the indicated is just below that, broken down again by pit and underground, and then totals. And then finally, the lump sums, which is probably the most interesting part of this. So basically, our total measured and indicated resources now is close to 39 million tons at an average gold equivalent grade of 4.3 grams per ton gold equivalent. So that comes out to 5.271, rounded up 5.3 million ounces in the measured and indicated. Now, unfortunately, we also added a little bit of inferred here and there, not just through the underground, but also in the open pit. And that sits at about 298,000 ounces at a slightly lower grade of 1.6 grams per ton gold equivalent. So on a tonnage weighted basis, 40% of our resource is now measured and 40% indicated. For those that would prefer to look at it from a gold equivalent ounce count basis, the measured is the 59% component, and indicated being 36. And again, from a global perspective, also including the underground. Now, why is that so important? Well, as we all know, we can't go into feasibility and convert inferred ounces. They have to be in the measured and the indicated categories. Now, although we would have probably had measured on the very first resource estimate that we ever performed on it, because it's based on drill density and de-risking and geological understanding, it wasn't until we actually completed the phase 1 and the phase 2 drill holes inside the 25-meter buffers that we were given the allowances with the new geostatistics, the new modeling, to basically create this much measured and indicated.
Now that's a key aspect. Let me jump in here, is because you guys, I believe, will be moving into those next studies, right? The pre-feasibility study, you can use pretty much all of these ounces. Now you're going to outline here the conversion and growth, but also, again, please touch on what the grades were in the last resource estimate compared to now too.
Well, exactly. The grades roughly are staying the same, which is nice because we didn't see any conversion loss in the grade. So that's sort of a moot point. But what we're very happy with, again, is the increase, the 40% increase in the gold equivalent resources. And here you can see a tabulation where on the vertical axis, we're looking at gold equivalent ounces in the millions versus the 2 years. And our original resource estimate in 2019 was basically split half and half on an ounce count basis between the inferred and the indicated categories with absolutely no measured resources. And then you can see here again, the 40% growth up to about 5.3 million ounces. There's virtually no inferred. And we'll have a visual here of the pit with the inferred resources in a second. And then basically largely split in between the measured and indicated, with the measured actually outweighing the indicated ounces right now at this point. So if we do a visual comparison on the top here, we can see our 29 resources. This is our typical section where we basically show the geology, the surface. This would be the old 2019 resource reporting pit. So again, not a feasibility, not a PEA, not an engineered reserve pit, but a pit strictly for the purposes of reporting something that has reasonable prospects for economic extraction. So originally, the next zone was considered to be an underground part of the project. So it was reported as underground resources. The other underground resources at a 5 gram per ton cutoff were the water tower zone. And we also had a little bit of material that was left over from the historical drilling in the 22 zone. Now, if we look at the 2021 resources, you can see that we've allowed the next zone to get incorporated into the open pit, okay? The water tower zone, which we talked about many, many times this year, has expanded substantially based visually on what you can see. So not only a combination of organic growth through drilling, but we also reduced the cutoff into something more reasonable. So we went from a 5 gram per ton cutoff originally in 2019 down to a 2.5, 2.7 gram per ton cutoff in 2021. The remaining next or northern extension underground sits below the pit here. And what's also nice is Kathy Dilworth, our resource geologist, managed to do a fabulous job of modeling some of the new lower mudstone intersections that we had. So this is on the books as well now, and 22 zone remains largely unchanged.
Paul, because the pit has been extended, is there anything, any comments on potential strip ratio changes that you guys might be dealing with as you move forward with this project?
Yeah, exactly. So the original pit in 2019, I believe, had a strip ratio of around 7:1. The new one it's about 9:1, right? So there's a considerable amount of waste that would have to get moved to take out the next zone. But keep in mind, again, it's strictly a resource reporting pit to determine what has reasonable prospects of economic extraction. There will be some sort of percentage of conversion loss in between the resources and the reserves. Obviously, that's the million-dollar question, and we don't have a crystal ball, so we don't know until those studies are completed. But that's essentially where we're sitting right now.
And can I just add, Paul, just to put this a little bit into perspective, if you take 4 grams and you multiply it times the value of a gram of gold in the rock, let's say right now it's around $60 a ton per gram. So that means the value of that rock is probably in the order of almost $250 per ton. And if our mining costs per ton are $3.50, and we increase the strip ratio by 2, from 7 to 9, we picked up an additional $7 of mining cost. To me, an extra $7 of mining cost on, on $260 of revenue is not a significant change. And, it's much more powerful to add another 1,000,000 ounces to this project, even if it does incur an extra $7 of mining cost.
Yep, fair enough. Well, and you know what? You guys are growing the resource too, right? And you're showing it's a big resource. So let's carry on here, Paul.
Yeah, no worries, no worries. Good point, Walt. Okay, so here we have our measured and indicated resources in the gold, the 21C zone on the closest side of the image, the 21E zone. Looks like we had a new smaller satellite pit getting incorporated as well from the strike extension of the 21C zone. And then finally, we had a good expansion in the 22 zone as well. Anything that you see in blue is actually the inferred resources. So you can see again, on a tonnage weighted basis, 40 and 48. So 88% of the resource is M&I and 12% of the in-pit resource is inferred. Now that's great for us because all we have to do is just very small drilling program to essentially mop up and clean up all of these little pods and convert them into M&I as well. The other thing too that a lot of people ask us too is, what's your percentage breakdown by rock type? As we all know, historically, Eskay Creek, they mined the contact mudstone, and it had the epithermal suite of elements. Our resource, as it stands right now, on a tonnage weighted basis by rock type, is close to 70% rhyolite, so clean mineralization. Only 18% is hosted in the mudstones, and then another outstanding 14% hosted in the hanging wall zones, which sit above the contact mudstones. So again, the ratios in a relative sense to what they were in the 2019 resource largely stay the same on the tonnage weighted basis. Okay, and just to give a quick summary as to why the resource grew the way it did was, again, incorporation of the next zone reporting as pitable versus underground constrained, significant growth in the 22 zone. We also had significant growth in the 21A, and we also had the development buffer reduction, which basically allocated to a couple of 100,000 ounces at 25 grams per ton gold equivalent, which was a substantial addition to the mine itself. And then in the underground, again, we lowered the cutoff grade. The water tower zone was substantially expanded. Modeling of the new lower mudstone horizons, as well as not on the books quite yet, but last year we also discovered the Eskay Deeps. So with that, I'd like to turn it back over to Walt, maybe to discuss our future timelines and what's next for us.
Yeah, well, let's talk big picture here because resources, they are a snapshot in time. This one over-delivered from what you guys were expecting. But now everyone is going to wonder what comes next. Are you moving into production? Is there more exploration potential? Give us a breakdown of what the plans are, please.
Well, we're trying to go on a dual track here. We want to keep advancing this project as quickly as we can towards construction and eventually production. But at the same time, I'm looking to Paul to keep growing the size of the resource, which will inevitably lead to a bigger production profile and a bigger reserve profile. I think the thing that the market doesn't get and doesn't understand, but I think that will start to change, is that this project, Eskay Creek, has the potential to be a tier 1 gold mine. And by that, I mean, I think it has the potential to be a mine that produces 500,000 ounces a year of gold and a mine life of at least 10 years. So internally, that's what we're targeting, and we're trying to strike that balance of aggressively moving the project ahead while trying to do further exploration and do further optimization that will take us towards that internal goal of a tier 1 asset. The pre-feasibility studies is targeted for the summer, and then a feasibility study would come 6 months later, and then we hope to be able to start construction next year if we can get the permits necessary to do that. And of course, also critically important would be consent from the Tahltan Nation to allow us to go ahead with the project.
So you talk about a tier 1 asset, 5,000 or 500,000 ounces of production a year for 10 years. Aren't you guys already there?
No, I don't think we are. I mean, the big critical question here is what's going to be the conversion rate on the M&I resource over to proven and probable reserves? And Paul and I don't know the answer to that question. It's going to come from Shane's engineering team, and that work is underway. And if you look at other projects out there, historical conversion rates, are anywhere from 65 to 75%. Sometimes 80%. Hopefully we're on the higher end of that spectrum, but we just don't know the answer yet. So, it's still critically important for Paul to continue to grow that resource. And I have the confidence that he can do that. And, so you just do the math. If Paul grows it to 7 million ounces, what's 7 million ounces times 0.75? That's 5.25 million ounces of reserves. So if Paul can keep growing and give us another 1.5 million ounces or 1.4 million ounces, I think this will be a tier 1 project. I think it's within our reach, and I don't think the market understands that right now.
Now, what about the exploration? Because even over the last year, even less than a year, you guys have discovered some new zones. I remember talking to Paul not that long ago about the lower mudstone and then the even lower mudstone area. Where are some of the near-term exploration targets going to be in terms of adding ounces, but then also making potentially new discoveries here?
Yeah, well, I can take that one if you want. Essentially what we've done is we've put together a SWAT team. So we've taken into account and hired Dr. Harold Gibson, who's a world-renowned volcanologist and specialist in VMS systems. And he's going to be paired and working side by side with our Director of Exploration, Adrian Newton. And they've assembled some of the better, very excitable staff members, shall we say, in the geological team. And they're given a mandate to go out and find at least another 1 million ounces in short order as well. So we've initiated this regional exploration program, and the idea is to target the additional ounces in the near surface for bulk tonnage mineralization. Because if you think about it, we're already going to be purchasing an open pitable mining fleet. It would make sense from a cost perspective as well as an ounce building perspective that you drill shallow mineralization, because you can just get to it that much quicker and put it on the books that much faster. So once they complete a complete and thorough compilation job and do some initial modeling, we're hoping to actually be drilling after a judicious target prioritization process in the second half of 2021. So we have to stay tuned.
Okay. Hey, Walter, I do also want one other comment from you, just comparing the stock performance of Skeena compared to GDXJ and also other development gold companies. You look at 2021, and so far Skeena is, for the most part, flat. It's actually up about 5% on the year. Well, you look at something like GDXJ, that's down around 20%. Other development gold companies, those are down 20, 30, even 40%. How or why do you think Skeena has been able to hold up so well when we've seen really the rest of the sector sell off this year?
Well, to be honest, I couldn't even have told you what our year-to-date performance is. I try to impress on the whole team. Don't focus on short-term gyrations in the stock price. Focus on creating value by building a tier 1 asset. And if we're able to do that, the stock price performance over the longer term will take care of itself. And I feel like that's our job. Build, find more gold and get on our way of permitting and building, a crown jewel for Canada's natural resource portfolio. And just to give you a sense of how rare a tier 1 asset is, there are only 13 mines in the world that meet that criteria of 500,000 ounces a year of production and 5 million ounces of reserves. So what we have in Eskay Creek is extremely rare and extremely special. And it's a privilege to be able for everyone on our team to be able to work on this project. And we all know how lucky we are. And with this honor and privilege comes the responsibility to give it everything we have to continue to make this company successful. And I think if we do that, the stock price has a great future ahead of it, going a lot higher.
One final comment then here, Walter, is with all the plans of growing the resource, continuing the exploration, moving through some of these other studies, how much money does the company have to satisfy all of these catalysts coming up?
Yeah, I mean, look, we're not we're not going to make we're not going to generate any revenue for a few years yet. So we will need to come up with a project financing package, which I would envision we'll probably undertake in the early part of next year. Currently, we've got about 35 million of cash in the treasury right now.
Okay. Well, guys, I really appreciate this update. If anybody has any follow-up questions, please email me, fleck@kereport.com. I will bring Walter and I will bring Paul back on the show to update us on more news, but I will also set up another interview if we get enough of those questions coming in, just to bring everybody up to speed, not just on this resource, but all of the plans for this year. We will also post a link to this presentation so everyone can follow along at their own speed. But I hope you all did garner a lot of information out of these slides that were put together by the team and us talking through this resource. Paul, Walter, I really appreciate your time today. Thank you for the update.
Thanks, Corey.
Thanks, Corey. Have a great day.